All done. All silent. Going. Gone. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Welcome to Current Market Insights podcast. Ciaran O'Brien here with Peter O'Malley. Welcome to the studio, Peter.
Good to see you, Ciaran.
Good to see you, my friend. I want to talk to you quickly today about the rental market. As our listeners will know, we do regular updates on what's happening in the sales and the rental market in Sydney. But the rental market, to me, seems to have changed a little bit, and I'm interested to get your insights. Where is it now, and what are you seeing week to week at the moment, Peter?
Well, I think at the outset, Ciaran, we should point out that the rental market is strongest at the beginning of the calendar year. So none of our listeners need us to tell them that the rental market surged between January and March this year, primarily triggered by international students returning to Sydney en masse. But it happened across the country as people reset themselves for the calendar year. So just as the beginning of the year is the strongest point of the rental market cycle in a calendar year, winter, which is where we are right now at the time of recording, does tend to be the weakest point in the cycle. So the rental market is by no means falling in Sydney, but the rapid increases in rent that landlords were enjoying at the beginning of the year have temporarily ceased. On the whole, I'm not saying that's widespread every property across the board, but the general trend is that the rental market's in a consolidation phase at the moment. What that means for landlords is they must be careful not to overplay their hand, lest they end up with an empty property.
So given that this time of the year is a little bit quieter, as you mentioned, most people are set up for the school year or the university year or whatever it might be, and mentioning that landlords shouldn't overplay their hand, if I am a landlord and I've got a tenant in, the lease is up, what would be the right play for me at the moment? Would I be looking to try and increase the rent, or would I be looking to keep a tenant on who might be paying less than market rent?
You need to understand what market rent is for your property, and where does current market rent for your property align with what the tenant is currently paying. And maybe the tenant is below market rent, but they're a good tenant who pay on time, who look after the property, and it's just not worth increasing the rent and having them risk move out to something else, or taking a cheaper property with less amenities than what yours offers. So when you're selling a property, there's only one game in town. Get the most money you can for it, because you'll only sell that property once. When it comes to leasing a property as a landlord, getting the right price, maximising the income is three parts of the battle. But there are some other considerations, such as the quality of the tenant, the ability to continue paying, the way they look after the property.
I'm interested, despite mentioning what I've seen with the rental market seeming to have changed a little bit, what I read online, particularly social media or message boards or whatever it might be, seems that there is still a frenzy going on in the rental market. Do you think that the media has a bit of a role in the messaging that's out there at the moment?
I suspect that the media are either reporting extreme instances, 50 people turning up to an underpriced one-bedroom unit in Surrey Hills, for example, and that's the footage that you see that night on the news. But I think across the board, when it's all levelled out, the rental market has settled down for the time being. We are not seeing the same numbers turning up to rental open inspections that we were in the first quarter of the year. That's just the way it goes. The other thing which I might speculate, I think in the media, a lot of the footage that you see about big queues at rental open inspections is actual file footage, and it's not actually taken on the day that you're watching it played on the TV.
Yeah, interesting. Do you think, I tend to think that it's just sensationalising an issue for the sake of, media attention. Is that all that's going on with this reporting, do you think?
Well, Journalists might find the 2 or 3 rental open inspections that have gone crazy that weekend, but Sydney is a big city heading towards 6 million people, so we've got to be a little bit broader in our assessment before we call it a crazy rising rental market when it may not be. Because if we continue to tell landlords that the rental market's rising aggressively, they will do things like overprice their rental property and end up with it sitting vacant, and then be left there bemused as to how they got there. I think the long-term trend for the rental market is up. Don't get me wrong. I don't want to send an incorrect message here. But even in an overall systemic boom environment, markets always do have periods of consolidation. And I just think in Sydney at the moment, we're in that phase of that consolidation phase.
Yeah, potentially good news for anyone who is looking to rent a property at the moment. I'm interested, we talked a little while ago about the government changes to the bans on rental bidding. Have you seen any downstream effects of that, with the properties that you're leasing at the moment?
Look, not the properties that we're leasing, but we have seen landlords looking at domainandrealestate.com and comparing their properties to other properties which are deliberately overpriced because the New South Wales state government have made it difficult for agents and landlords to ask for more than what the property's advertised at. So that's encouraged overpricing. And then you've got incoming landlords that are not as close to the market as what the property manager is, saying, well, based on the attributes of my property, this property here, for example, at $1,000 a week, and I'm getting $800, mine's better than that. So put mine on at $1,050, and then they're absolutely gobsmacked when they look on the TV and see a rental queue for 500 people at a 1-bedroom unit in Surrey Hills, and a comparable inferior property to theirs is on the market at $1,000 a week, and then they put theirs on at $1,050 and no one turns up. And they say, what's going on here? And it's like, you're overpriced relative to the current market. The other one which is throwing the market out is that $1,000 a week property may lease, but nobody knows whether it leased for $1,000 a week or $900 a week.
Yeah, absolutely. And just because something's on the website for $1,000 a week doesn't mean that it's worth $1,000 a week either. It could just be another investor who thinks that their property is the best one in the street. I'm interested then with rental market being a little bit tempered, so to speak. If you're an investor, is it a good time to jump into the market at the moment?
As a purchaser?
Yeah, as a purchaser.
I don't think we'll see investors come into the property market until they're confident that interest rates have peaked, and it would be too soon to speculate on where that peak interest rate is at the moment, given inflation's looking more stubborn than it we'd otherwise like it to be.
No, fair comment, Peter. Look, I'm going to keep it short today. Just as we wrap up, any thoughts, if you are a landlord who's having to make a decision at the moment around what they do with their tenant or their lease or whatever it might be, is there any advice you could give them, whether it be, negotiate or discuss with their property manager or do their own research on the market? What's the kind of best bit of advice for these investors to make sure they're making the best decision?
Yeah, look, vacancy is the enemy. So if you've got a good paying tenant and during this period they're not quite at full market rent, but they're paying on time regularly and looking after your asset, well, they're an asset to your asset. That's the first point. The second point, and this is probably a life principle, Ciaran, someone telling you they're going to pay you a lot of money is a completely different event to someone actually paying you a lot of money. And if the RBA's interest rates continue to create duress in the economy and drive up employment, we will get to a point where tenants are on really high rents but can't actually afford to pay the rent. So I think people just need to be conscious that they want a good tenant who's capable of paying them as the events that are unfolding continue to unfold, because you don't like to say it, but I think the reality facing the RBA is they are going to have to drive unemployment up to get inflation down.
But there's only so much juice in a lemon, right? You can only squeeze it so far. And unfortunately, you're exactly right. There are going to be renters who, despite massive incomes, just may not be able to pay anymore.
That's right, unfortunately. So, yeah, assessing a tenant's ability to keep going is really important.
Good advice as always, Peter. I'm going to wrap it up there today and thank everyone for listening to Current Market Insights. I will speak to you next week.
Thanks, Ciaran.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.